Welcome and thank you for being with us today. I'm Amjad Ahmed, Director of the Atlantic Council's Empower Middle East initiative. Our aim at Empower Middle East is to shape a new narrative for the region by highlighting opportunities for economic expansion and policies to facilitate further positive changes to build the dynamic economies that drive sustainable job growth. We are honored to be co-hosting with our friends at Abana today, the preeminent U.S. organization for finance professionals and institutions with interest in the Middle East and Africa, a distinguished panel of Fintech innovators to discuss how they are disrupting the financial services industry landscape in the Middle East. This is the second webinar in our joint series that aims to shed light on recent changes and innovations in Fintech. We began this series in October with a webinar moderated by our very own non-resident senior fellow and Oliver Wyman senior partner Dominic Treek, who is joined by regional regulators and policymakers on how to build a Fintech ecosystem by promoting progressive regulation and reform. There were several key observations from that session. Number one, it is clear that regulators have been caught flat-footed by the rapid emergence of new technologies in financial services, but now are keenly focused on the sector. Two, there is a lack of laws and regulations today to support new technologies. And three, regulators need to ramp up their understanding of new technologies in order to formulate efficient regulation to keep pace with the market. The pace of innovation in fintech has been staggering, to say the least, and I'm honored that founders from Tabi, Sarwa, and Fawry have joined us today to discuss their pioneering roles. It is now my pleasure to introduce Ola El-Shawarby, who will moderate today's discussion. Ola is a senior member of the portfolio management team of the active emerging markets equity strategy at VanEck, where she primarily oversees the Europe, Middle East, and Africa region of emerging markets. She is also a member of Abana's board of directors. Ola is a CFA charter holder and a member of the CFA Society Egypt. Ola, thanks for being with us today. Over to you.
Thank you very much, Amjad. I'm very happy to be here and quite excited about the panel that we're about to go through now, and very happy to have three very distinguished panelists with us who are in the respective companies, pioneers and leaders in the fintech innovation space. First off, we have with us Hossein Arab, who's the co-founder and CEO of Tabi, a company offering buy now, pay later solutions in the region. And Hossein is also formerly the founder of Namshi, a Dubai-based online fashion retailer. And he has had a successful exit selling the company to Amar Malls in the past few years, and then transitioned over to start a new venture with Tabi. And we'll hear more obviously about what he's doing now. Secondly, we have with us also Nadine Mizler, who's one of the co-founders and CMO of Sarwa. And it's one of the earliest, and I guess probably the first investment platforms, online investment platforms in the region, looking to democratize access to investments, as she herself said in some of the interviews. And she comes with a multidisciplinary background with successful initiatives in retail and marketing in the past in the region. Very happy to have you here, Nadine. And then last but not least, we also have Ashraf Sabri, the founder and CEO of Fawry, one of the earliest companies in the digital payment space in the region, definitely the first in Egypt, and one of the few companies that are publicly listed in this space, and also a company that has reached the very aspirational unicorn status, being now a market cap of over $1 billion. So again, very excited to have you here, Ashraf, and we look forward to listening to all of you in the next hour or so. Obviously, these introductions don't do them justice. We have the full bios on the event link, so I encourage you to go read through them. But in the interest of time, I'll just delve in because we have a lot to cover and probably not enough time to do so. So Ashraf, starting with you, as mentioned, you were one of the first movers into the digital payment space, looking to sort of transition people from a cash-based society into a more cashless society. We are very interested to hear about the original vision that you had for the company, given that back then, I think in 2008 or 2009, it wasn't something that was as talked about as it is today. So it would be great to hear your vision for the company at the time and how it has evolved. And also, how important was it strategically for the company to be one of the first movers in the space?
Okay, well, thank you very much for having me with you. Look, I wouldn't say that we started with a vision of being a fintech. Okay, it was not like that. Things have different names at different times. When we started, it was basically, I was moving from an IT company. And we were, our revenues were driven by project-based revenues, okay? And then I was lucky enough that I had the opportunity to raise funds for this IT company and to take it public. And one of the main questions that we were always asked, where is your annuity revenue? What is the recurring portion of your revenues in the business? So I said that my next move, have to be in a field, since investors are very, appreciating recurring revenue, and they don't like project-based because of working capital, because of one-offs, because of many other issues. And we looked into the space, and we found that, bill payment is an area that many people are using, so the nature of recurrence is very high. And in the meantime, the way people were paying their bills in Egypt was a little bit sophisticated, so it's very tiring. So we decided that this is an area where there might be a good opportunity to start creating convenience for people and helping organizations to manage their collections more effectively. And this is how it started. And then, as you go, you start, we built a network, and this network is now around 230,000 agents all over Egypt. And then we have been connected to all the banks, and new use cases start to come in. Okay, so we added, merchant lending. We added the payment by merchant to their suppliers. We added having our own consumer direct app, and so on and so forth. And this is the beauty of the whole thing, that once you are in a platform that was built initially in an open way, that can integrate with many partners, that can be hooked with banks, that can be hooked with organizations, then it's your duty to leverage this platform and leverage your partners to give the market new solutions. So it kept evolving, and what we used to do 10 years ago as 100% of our revenue now is 60% of our revenue because of adding new streams. Very optimistic about how things will evolve with the many things happening in the country. And we will be looking forward to the new challenges. We feel still young. We feel still, although, the company is big, but we would like to feel that we are still a startup. This gives us, real energy into looking into new opportunities and making changes.
Thank you very much, Ashraf. We look forward to hearing more from you. If I shift gears over to Nadine, I think, like I mentioned in the intro, you did mention a few times that you guys are looking to democratize access to investments. It's something that we hear about globally as well, but you're a pioneer in the region. Can you help us understand what was the problem that you set out to solve? And also, how do you think about Sarwa? Are you viewing yourself as a disruptor to the traditional investment advisors and wealth managers, or are you looking to kind of grow the pie and educate people about investments? And from that perspective, you are sort of a partner or a complementary business to what the traditional wealth managers are offering.
Okay, Ola. So I'm going to address the first part of the question. As you mentioned, Sarwa is an investment platform. So we basically help people invest in international markets through two core products that we have. We have Sarwa Invest, which is long-term passive investing. And then we have Sarwa Trade, which is a do-it-yourself trading platform. And you asked me why we launched Sarwa or how are we helping democratize. The reality is, like so many startups, we started Sarwa based on really a problem we saw with the immediate circle of friends and family. So I can tell you my partners, Mark and Jad, were in Canada, and anytime they would ask someone from the region about what do they do with their savings, typical answer would be, and I say that on many of the interviews I'll go on, is either they have it sitting in a saving account or it goes into real estate. And personally, I faced, a very close family member of mine that wanted to invest his money, and he had money saved, but the traditional advisors, as you mentioned, would not take that person because they didn't hit the minimum requirement. So to us, it became really a need, and we saw that we can do something about it. We can launch a solution that helps people in the region, regardless of their background, their net worth, their age, to actually grow their money and build for a better future. So it's really the way we wanted to position Sarwa, and we still believe in that mission very, very strongly, is that it's affordable investing that's extremely accessible, that's easy to use, and that's there for everyone. So it's about growing wealth in the most affordable way. So before, it used to be that wealth was for the wealthy. We really want to change that perception. Now, you asked about, do we see that as competition? Do we work hand in hand? The reality is, we do believe that, these traditional investors did not address the market that should have been addressed, whether it's, the younger generation, or the mass market or the mass affluent market. So that's one of the reasons that Sarwa became so successful very quickly, is because we listened to the market and we were able to provide that solution. Education is definitely key. It is something that we focus on a lot because we want to be able to give our community, to give our clients the tools that they require so they're able to really build for their future.
That's very exciting. And maybe just to put some perspective for our audience, can you perhaps talk about what's your minimum required capital to invest, and how does that compare to the traditional, on average, I guess, to the traditional wealth advisors?
Yeah, of course. So actually, you can start with $1 for trade, and you can start with $5 for invest. And one thing, Ola, I want to also mention is we don't have lock-ins. So basically, anyone can actually start their account, fund their account, close or withdraw money from their account without any fees. And again, it's super transparent. So the pricing is on the website. We have everything on the website. The account opening is very smooth. It's fully digital. And it takes 5 minutes to open an account. So anyone that used to say, investing is not for me because I don't, I'm scared, I don't understand it very well, it's too complicated. We really made the process super easy, and it's 5 minutes and you have your account ready. With a very minimal amount, you can test it, you can start it, and the fees are really extremely competitive, regionally and internationally.
That's great. I can definitely confirm that I also get asked so many times by friends and family who know I work in the industry about investing. And so from now on, I have an answer. I refer them to Sarwa. So thank you very much for your comments, Nadine. Hossein, if I kind of shift gears to you for a moment, I think we've seen globally companies like Alibaba, like Mercado Libre in Latin America that started out in e-commerce and then transitioned into fintech as a complementary offering. And in some cases like Mercado Libre, it's a pretty profitable business on a standalone basis. We've also seen companies like Kaspi that came at it from a digital banking and consumer finance standpoint, and then transitioned or expanded to offer e-commerce as well. So I'm very curious to hear your thoughts about this, given that you come from an e-commerce background, but for your new venture, you decided to start a buy now, pay later solutions company. So how do you think about this? Is there a right way to do this, or a better way to do this? And how is your own background in e-commerce helping you differentiate Tabi compared to other buy now, pay later solution providers?
Sure. Thanks for having me, first of all. And so, yeah, on your question, I think obviously there's many ways of doing things. I don't think there's one single right way. What what some of the other players that you mentioned globally do is they had a platform and a fairly large platform at that, and that allowed them to be able to offer their large consumer base additional products and services in the form of fintech products that you mentioned. Now, my personal view is on what we're trying to build with our buy now, pay later solution is we're trying to be as agnostic as possible to what exists out there, right? We're bank agnostic, we're merchant agnostic, we're card agnostic. And the view here is we want to make this product available to everybody equally, whether you bank with this bank or the other, or whether you buy from this retailer or another one. And so our product has come in and based on some of the problems that we saw trying to scale e-commerce in the region. Primarily, the biggest pain point for us was the over-dependence on cash as a payment method for e-commerce in our part of the world, right? So when we started the business in 2011, 80% of our volume was cash-based. And when we exited the business in 2019, 70% of our business was cash-based, right? So very slow movement away from cash. And that presents a huge amount of obstacles for a typical e-commerce provider in terms of scaling their business. There's a lot of complexity to managing cash, uncertainty, there's additional costs. And so we thought, with the growth of buy now, pay later globally and the value that it clearly has provided to merchants in other parts of the world and consumers, are we able to show that level of value and provide that level of value to the extent of moving customers from a cash transaction and convincing them that there's enough value in this payment method to shift you away and to convince you to start using your card online. And so that was the real driver. Obviously, on its own, buy now, pay later. There's your what we know about in terms of value proposition for the consumer and for the merchant in terms of free financing and on the merchant side, better conversion and better basket size. But if we can also address the biggest pain point that we saw in the market, i.e., cash, then I think we're solving a much bigger problem, specifically to our region. And to be honest, that's precisely what we've seen take place, right? In other markets globally, buy now, pay laters have come in to displace cards, and that's it. We are coming in to displace not just cards, but also cash. And so the opportunity is significantly bigger, and the consumer adoption has accordingly been much faster than we saw in other places.
Very interesting. And how is the process in terms of like granting approval to buy, and I guess maybe a bit more about your customer profile?
Yeah, so I think one of the things we also believe in very adamantly is while we are providing a sort of financing for the consumer, we also want to promote responsible spending. So most consumers start off with a relatively small line, if you will, and based on their spending and repayment behavior, we start to extend additional credit and additional financing to them. But the view is, at the end of the day, we are assessing the customer's ability to repay. We end up taking risk on the consumer, and therefore, for our business model to sustain, we need to be able to only give credit where or extend credit to customers that are able to afford it and are able to pay back. But at the end of the day, what differentiates us from what exists out there in the market is we're very transparent on our proposition. Customers pay no fees, no interest. We are fully funded by the merchants that we work with, and so for the typical consumer, it just becomes an extremely convenient way to pay for your everyday purchases, and that's what we're trying to promote. It's much more about convenience than it is about buying outside of your means and extending credit or extending your cash flow.
That's great, thank you. And Ashraf, I guess back to you. I think you also were trying to solve the problem of, to an extent, displacing cash. And like you talked about, as you built out the ecosystem, you've been adding more services to your offering. I think we've seen you also make some investments in the startup ecosystem overall, including some e-commerce players. So it would be helpful to maybe talk about how, again, the e-commerce and fintech worlds are kind of marrying, or the lines are getting blurred. and how you think about your investment strategy and how it plays into your longer term plans as well.
Okay. Let me first, address a little bit the relation between commerce in general and financial services. Okay. Commerce in general, whether it is an in-store commerce or whether it is buying online, whatever, is a transaction that is happening. Okay. And I think more and more, we will see that people are starting to build their financial services on transactions. So if we speak basically about even buy now, pay later, or whatever the name is, that has been named equal monthly installments before, and it has many names. But at the end of the day, the main difference actually is that you are financing a specific transaction. And the main difference generally as we speak is that the more you are into the lives of people, which means that you are enabling them to use your platform for fulfilling their different needs. The more you understand people, the more you can finance them easily. So what I'm trying to say here is that the whole idea or how the systems are evolving everywhere in the world is that you are more capturing people behavior and helping them to fulfill their financial needs. And I think this is actually the main reason behind us investing in many startups or many even advanced companies that are fulfilling the consumer needs. So the more people are fulfilling the consumer needs through online, through digital payment, through having a vertical solution, an e-store or fixing something or whatever vertical solutions where those startups are coming in place, the more you are building an ecosystem around the platform that would enable you serving the customer better. At the end of the day, we have realized that it is extremely difficult that you capture every portion of what the customer is doing. There are very innovative ideas. Yesterday we were meeting a company that is working on fashion and sampling of fashion and whatever. And then every day we are meeting different companies that have interest in specific vertical, serving different set of customers and different needs. What we are trying to do with our investment is actually to hook those in a single platform, expanding the ecosystem that would enable us to understand the customers better and then offer them different financial services altogether. So our investment strategy is really about expanding the ecosystem, leveraging people, leveraging ideas. And this is what we are trying to do. And we believe the more we go into that direction, the more we can expand on the ecosystem. And it's all about integrating different platforms right now, leveraging different platforms, leveraging people, leveraging banks, leveraging. The more you can do that, the more you can bring more services to the customer where he is. And this is the main actually reasoning behind the investment and behind building the ecosystem.
And I think maybe to follow up on that, I know you've also been sort of for the longest time a partner to the banking system, providing
Yes.
perhaps filling in some gaps where they haven't been as active, providing technology in the background as a white label solution for them.
Yes.
As the ecosystem has grown and as you yourself have expanded the services and are now thinking about offering your own card for payments,
Yes.
how has that relationship with the banks changed? And are they now maybe viewing you as in a different light? Is there more competition, or are you still sort of in a partnership state?
No, I think we are still in a partnership state. And the reasoning behind that is very simple, okay? Banks realize that when you look at all the new products or all the new offerings, they are dependent on technology. Technology is the main driver for either easier customer acquisition, better customer service, new products and services. And bank realized that they do have their core platforms, and those core platforms cannot accommodate the last mile changes. So any model where you can cooperate actually with the banks to leverage their core assets. I mean, all banks have their assets and liabilities, have their deposits and lending. They have very strong rails and they have very strong foundation that we can leverage that we don't have. Okay. So the more we can find out ways to be their distribution channel, to be their way to access customers in a different way, and find this cooperation model, it is actually a win-win situation. I mean, I'm not sure about the entire world, but I'm sure about Egypt that when you look into the balance sheet of the banks, for example, you'll find that the majority of the savings is coming from the family sector, and the majority of the lending is going to the enterprise sector. Okay, so there is a big mismatch, and the reason for not going easily to the retail and to the consumer, okay, where they can have higher margins and they can serve is their lack of agility and their lack of being able to serve those customers better. So if we can happen and create this type of marriage, probably we are gaining. I mean, so our card is with a bank, our lending is with a bank, you know, and we are developing different products with them. It is expanding the base. So till now, they are happy with that.
Thanks, Ashraf. And Nadine, so we touched on this already earlier about traditional wealth advisors and kind of how you position yourselves compared to them. Banks are historically big players in the wealth management space, but obviously they were having a higher end segment as their target market. Now that Sarwa is growing and the runway for growth seems to be quite long, how is the relationship between you and the banks? Are they are you starting to raise eyebrows? Are they approaching you for partnerships, or are they maybe feeling somewhat threatened by you? And if you can tie that also into your fundraising strategy, that would be great as well.
I mean, I can't speak for the banks, to be honest, but I can tell you that from our end, the focus right now is to grow the business regardless. So what we have as a Northern Star is really just, again, growing the market share, focusing on our clients. Sarwa is extremely customer focused, extremely customer led. So wherever, you know, we listen to the market, we go with the market, and we try to provide as much as we can, you know, ease of use, new products expansion. The opportunities are still massive, whether it's in the UAE or in the region, to grow. So I would say for now, from a Sarwa perspective, that's what we're focusing on. Fundraising, we very recently closed our Series B, and that was led by Mubadala. And that gives us, you know, enough leeway to actually focus on growing first the team, growing our marketing budget so we can reach as many people as we can, building really the right infrastructure, because we want clearly to scale as all startups, scale-ups, whatever the term is. But what we want to do is have the right really infrastructure before we grow into new markets and build on the team that we have, build on the products, improve the products, launch new products. So that's been really the focus. That's going to be the focus for the next, I would say, short term to midterm. But to answer your question, I do, and we all see that there's a change in the ecosystem. There's a change that's happening here in the region. And not only from a bank perspective, but even whether it's, you know, government funds, whether it's the VCs, whether it's the private and public sectors really looking into the region. So you do sense that there are opportunities to be explored much more here. Before it was looking outwards, now it's inward looking. And we do see also international VCs potentially looking into expanding their market beyond what could be a saturated market for them. So we see more eyes coming here. And the reality is there is ease of business. There are a lot of incentives. You have a young population that has very high mobile penetration and adoption. So, and many, many services to be disrupted. So it is maturing very quickly.
Definitely a lot of energy and excitement in the space. And it's also great to have someone like Mubadala in your cap table with their financial muscle and also their pretty decent track record. Any statistics that you can share with us in terms of your current market share and how do you think about your addressable market and kind of what could be an achievable market share for you guys in the medium term?
In terms of specific market share, I wouldn't be able to tell you exactly. Reports really vary from one place to another, but I can tell you about the wealth in the region. And if you look into reports from McKinsey or from Deloitte and so on, it's addressable anywhere between 400 to a billion, right? In terms of assets that are available in the region. But our target right now is really the young population. And when we started Sarwa, we were looking really to go after millennials, but now we do see, it turned out we actually cater to a very wide range of client base and across nationalities, across backgrounds, across ages. Core segment has been and is still I would say the 30 to 40 years old, but now we see more of the next gen coming in. So it's a younger age group that's interested in investing and entering the market. And definitely the approach is a little bit different, but the reality is they're looking to invest, they're looking to grow their money. And going back to a question you asked me before is the reason why we focus on education, because we still believe that ultimately, you have to have the right approach to be able to grow that wealth.
Thank you, Nadine. And staying on the fundraising topic, Hossein, you also have been pretty successful in raising funds. And I was very curious to see someone like Delivery Hero in your cap table, which is one of the largest online food delivery platforms and quite active in the region. Can you talk about your fundraising strategy and also how some of these relationships, I guess, from participants in your cap table could be pretty valuable longer term from a strategic standpoint?
Sure. So yeah, I mean, as Nadine mentioned, I think there's a lot more capital looking at the region right now, and as a startup, we try to be strategic about where we raise from and who we're raising and getting investments from. So when we were raising our last couple of rounds, we were looking to address a couple of key requirements. One is regulatory relationships in each of the markets that we were operating in, hence bringing on Mubadala, for example, in the UAE, some of the larger VCs in Saudi as well. The other area that we were looking to address is kind of access to deep capital and deeper pockets of capital as we scale our business, access to debt financing as well as we scale our business, and then access to merchants that we leverage the relationships with, right? And our business model requires direct access to the merchants that we work with in order to get to the customer. And so, when we were looking at raising money, those are the questions we were asking the investors that we were speaking with. Where can they provide help across some of these areas? With Delivery Hero more specifically, these guys are looking to do more and more on the fintech side. They've made a number of interesting investments across many of the global markets that they operate in. But for us as well, it was as we look at expanding our merchant reach and our product offering, food delivery and grocery delivery starts to make a lot more sense, right? And so Delivery Hero has some of the largest platforms in the region. And one of the discussion points was around us being able to leverage and getting access to the customer base that sits there. So many different ways in which we can partner with the investors that we work with, but we wanted to be pretty deliberate around who we work with based on those.
Sure, it makes a lot of sense given that it helps with scaling the business if you can tap into an existing customer base. Can you comment also on your thoughts about the competitive landscape for Tabi and I guess maybe key concerns in that area? I assume we're still at very early stages, so everyone has room to grow, but it would be helpful to think about, the competitive landscape and how it's shaping up over time.
Sure. So as you said, I think it's still very early days. Our penetration as a share of overall retail in the market is still relatively small. Having said that, there's I think what differentiates this market as opposed to some of the other markets globally is the merchant structures and the retailer structures that we operate under. Right, most of the retailers or most of the brands sit under large family groups in our market, as opposed to individual brands that operate on their own. And so if you think about it look at it from that lens, there's a limited number of potential targets that we can go after. And therefore, it does become a bit of a land grab in the early days to try to get access to the largest retail groups in the market. And so that's something that we try to focus on early on, leverage a lot of the relationships that we built in my previous business at Namshi with a lot of the retail brands, to sign them up early on and get access there. I think what differentiates a buy now, pay later outside of product, which I think over time just becomes a lot more commoditized, it really becomes the scale element and the platform that you're building and what you're putting on it. So for us, it was essential that we scale this business out very, very quickly and leverage the customer base that we're building on in order to get access to additional merchants and just build that network effect that we can continue to leverage. My concern about a lot of these business models and the direction that they take once things get overly heated on competitively is we tend to very quickly start to differentiate on price and price only. In my previous business in e-commerce, that was definitely the case, right? It was very quickly a race to the bottom on margins and on pricing. But in fashion e-commerce, we had a relatively large margin to start off with. In fintech, that's not the case, right? We're talking about hundreds of basis points that you can play with. And a race to the bottom there doesn't last very long. So that's what we're trying to control at the moment. We're trying to ensure that we don't destroy this market before it's even started, and build out something that sustains the long term, and to build out differentiation outside of just pure pricing, which is a losing battle for everyone in the space.
Right. Makes a lot of sense. I want to make sure to give the audience also an opportunity to ask you guys questions. So I'm going to open it up for Q&A. If you have a question, please use the Q&A function in Zoom. And thank you very much for joining us today. We look forward to having the questions to our panelists. So I'll see if we have any existing questions. Perhaps while we wait, one area that I'm sure people are curious about, and we've seen it, present opportunities, but also create challenges in other parts of the world, is regulation. We've seen recently regulation catching up sort of with the Chinese e-commerce players, and that has created a lot of uncertainty in the market. So if I can briefly get your thoughts on the regulatory environment, if there's an opportunity, a challenge, it would be great while we get our first question. I don't know, maybe Ashraf, over to you, because I know you talked about the IPN as one of the opportunities, and then happy to hear from Hossein and Nadine as well.
Well, let me tell you, I mean, when you look at the central banks, they are very eager to make things happen. But in the same time, they are very afraid that the banks can be eroded. So they have this internal conflict within their space. I mean, they don't want to miss the opportunity of having fintechs in helping inclusion or expanding the market. But in the meantime, they are a little bit concerned about how this will affect the banks. Okay. However, I can say that generally we are on the positive side. Okay, we are not on the negative side. So generally, the regulator is trying to leverage people while trying to take care a little bit that there is a sort of partnership with the banks, that the banks would have a fair chance in the story. So I think this is what's happening now. And so if I take Egypt as an example, no, I think the regulator have been very very open towards introducing open banking, enabling instant payment networks, introducing digital banks, different bank licenses. So overall, I think the regulator is taking a positive approach, but I think in the back of their minds, they are yet, a little bit afraid what will happen. How can this affect the banking system? What will be the impact? So this is one. The other thing that I'm witnessing more and more right now, that regulators are a little bit skeptic about monopolies. Because what they have seen in China and when the Googles and the Facebooks and the rest are coming into the financial services space, they started to really look how would this again impact the ecosystem, because what they have seen in countries like Kenya or like China or like whatever, that after those fintechs mushroom to the extent that they cannot control, things starts to be a little bit more difficult. So I think they are more aware right now. And you can look at, for example, regulators in India, and you find out that they have kept the growth of companies. So they said to the Google guys, it is 30%. You not grow more than 30%. And I think more than that will be coming, that they will not allow dominance by players in the market. This is how I see it in Egypt and around the world, actually.
We have our first question from the audience, but Nadine or Hossam, if you have any comments on the regulatory environment, happy to hear that, and then we can ask the question.
I'll try to be very brief, but I completely agree with Ashraf. I think the regulators, they have a very balancing act to do. And I can speak from a UAE perspective. I do not believe that the goal is to inhibit innovation, but the real is not only about protecting banks, but also protecting end users. So we see that where they're trying to make sure that, everything is done to protect, whether it's data privacy, whether it's the retail investor and so on. We've had a great experience. We've sat with regulators. So Sarwa was the first one to receive the innovation testing license by the Dubai Financial Services Authority. We're also regulated in Abu Dhabi by the ADGM FSRA. And you do see that there is an open dialogue, but at the same time, they want to ensure that ultimately they have the best interest of everyone in the ecosystem at heart, while trying to really support and promote newcomers into the market.
Thanks. Hossam, anything to add, or should I move on to the question from the audience?
Please proceed with the questions. Yeah, no, I echo the comments.
Sure. So we have a question that I personally think is quite interesting and very curious to hear the answer for. Our audience member is asking you to perhaps elaborate a bit more on what actions your respective businesses are taking to reach out to women customers, which historically haven't been as financially active as male customers, I guess. And also, how can fintech be an empowering tool for women and promoting women opportunities? And I'll say that, this ties very well into the ESG theme, which is something that we're hearing a lot about from both our own investors in the fund, but also from companies. So it would be great to address this question, and also any general comments on ESG would be fantastic.
Nadine, do you want to take that first, and we can?
Why not? I can speak from experience.
Exactly.
I can tell you, Ola, from our end, on the platform, we have around not more than 30% of our client base that are women. And I personally want to see that number increase. And I go on every platform and I really encourage women to invest, because I'm a big believer in financial independence that can empower, whether it's male, female, but financial independence ultimately gives you, options in life. And that's not a number that's pure to, that's Sarwa specific or region specific. We see that across the globe. We see that in North America. We see that in Europe. So one of the main hurdles that we hear from women is they feel they don't have enough information. And I think that should not be an excuse. I think, when it comes, at least from an investing perspective, they just don't feel overwhelmed. It's very easy now. You have these tools that can make it super simple and super accessible. So just about, taking that jump. Statistically, when we see women coming into the platform, they convert faster than men. So once they make that decision, they actually go for it. They don't change their mind. So that's really good data to actually go by, but it's just about how do we get them. We are doing a lot. We do webinars, we go out, we do education, we do targeting in campaigns. So we're trying to increase that number, at least from a Sarwa perspective.
On our end, so the product that we built so far really is there to provide access to those that don't have access to credit, and traditionally in our markets, I think those that have access to credit in the form of credit cards have traditionally been men, and just due to how the employment structure has worked out in countries like Saudi Arabia, in particular, right? So when we go out and position ourselves as a credit line to the merchants and to the consumers that we work with, it really is to solve for that consumer that doesn't have access to credit, and that is in the form of debit card lines of credit, right? So today, 90% of our customers actually transact via debit card, which is very, very encouraging. 60% of our consumers are actually women. And that's something that we're very proud of, because this is a segment that has been ignored by the banking sector, and we're trying to solve for that. And over the long term, obviously, we get into additional products and services that provide additional access and more direct access rather than just in the form of credit.
Well, I mean, from our side, I think we have tackled this in different ways. So initially, I mean, it was job creation. So I mean, we partnered with many organizations. I can recall. I mean, a program was HEYA, and it was just enabling women to use a small point of sale for job creation, for making money out of that. But the reality is, I feel very much optimistic about the effect of technology on the contribution of women. And I would take two examples that I feel, would really help that. Number one, social commerce. And women are very strong in social commerce. Okay, and they were strong before even, all those chains that have been built around social commerce. Women was leading in that respect. So we have partnered in a company called Bremore that is really focusing on social commerce, and the majority of their resellers and sellers in the villages and everywhere are women. Okay. The other thing that actually is actually buy now, pay later. I mean, in Egypt there is something called Jam'iyya. I don't know. I mean, if it is available other. But the credit officer of all Jam'iyyas are women. Okay, they are the trusted part of the family, and lending women, even for the more you go to the bottom, the more you found that the main responsibility is the responsibility of the woman, not of the man. Okay, and you feel more they are more trustworthy. They will take the money to do something good with. Men, can do anything with money, okay? But women are looking for their family, for their children, for making sure that the money is going to be deployed in the right way. So I think actually technology is much in favor towards women than men, and they are scaling the opportunity for women for what they have been doing before, but scaling that very large. So I mean, very much pushing for that, very much leveraging the capability of the woman, not helping the woman. I'm looking at it on the other way around. I think women are more capable of selling. Women are more capable of assessing credit risk, and they are more willing to repay because they want to make sure that their families, they are there for their families. So I mean, this is what we have done. We will keep pushing into that direction, and this is a very growing direction, especially if you want to.
A point on this. Ashraf, a point on this is for us, women are twice as likely, more likely to repay than the men on our platform, which is extremely interesting.
So I mean, so we are actually capitalizing on women, not helping women. Okay, we are trying to leverage what they are doing to help us.
Yeah, that has been actually, interestingly enough, our experience as well, investing in different micro lending businesses across emerging markets globally. The ones that are lending exclusively for women for working capital needs, their default rates and their asset quality metrics stack up so much better than the ones where the client base is mixed male and female. So I'm actually very excited to hear about these initiatives. I think it's good for the society, but I also think it's pretty good for business. So I'm all for it for sure. We have another question from our audience. They're asking you to comment on innovations you are seeing in cross-border peer-to-peer payments and transfer products. And they're asking, aside from e-commerce and retail, how do you see P2P product market developing, especially given the complex regulatory issues that are unique to each different country? So, I mean, maybe Ashraf, you can comment on that, Hossam as well, and Nadine, if you also have any thoughts, they're more than welcome.
No, I think markets are opening, and the more we have digital KYC, digital AML, digital negative lists, and all the stuff, the more we can have a frictionless transaction. Okay, but I think by all means, I mean, we are seeing more consolidators for remittance business, for example, that is happening. We have been licensed to do the same in Egypt. We are integrating with the bank systems, with the other consolidators outside the country, and I think less friction will happen in this space, and this will happen. I mean, no doubt. Okay, because it creates convenience, it creates more transparency in pricing, and I mean, if you look from another angle, although it is not P2P, but if you look at what was the main use case behind Revolut and other digital banks, is that they took the surcharge being put by the banks on any international e-commerce transaction, 2 or 3%, and they say we are going to take the spot rate. Okay, so this is happening, and the same is happening in remittance. And I think what will happen very soon is that those borders will not be there. The most important thing is how you can make sure that regulatory requirements in terms of negative lists, in terms of AML, in terms of know your customer is being well controlled. But if this happens, I think we're going to see a boost. And in terms of P2P and instant payments, look into other markets. India boomed P2P, more use cases. I mean, money instantly goes into your account. There is no next business day settlement. There is no fees are very transparent in the single process. Merchants are taking their money instantly. Many things are happening. Okay, so this is a very valid use case that will evolve 100%.
Thank you, Ashraf. We have a question specifically for Hossam. Our audience is asking, how do you select your clients?
So I wasn't sure if that meant merchants or consumers, but let's assume it's on the merchant side. So we work with merchants in the retail sector. Primarily, our focus today is on e-commerce, but we also serve merchants in the offline space as well. Traditionally, what we look for is merchants with relatively lower basket sizes. So we're not funding large ticket transactions like TVs and appliances and cars and so on. It's your typical everyday retail purchase, and so we're open to working with anyone within that sector. On the consumer side, once a customer has seen us on a merchant's platform, we run a quick risk assessment in the background to assess whether this customer is able to make a purchase and able to borrow based on primarily behavioral criteria. We don't look at traditional credit sources just because those have been those are not as rich and the coverage is not as high as we'd like it to be in the markets that we work in. But it really is around what this customer has done in the past online in terms of purchase history and so on. As we said, we start off with a relatively low limit, and based on the performance of that consumer, we're able to extend additional credit over time.
And then we have a follow-up question on the lending to women question. The audience is asking, what type of collaterals do you need to qualify for a loan to create your business for women? I'm not sure, it's not addressed to a specific panel member, but I don't know, Ashraf or Hossein or Nadine, if any of you have any thoughts on that.
So we don't take any collateral whatsoever. Basically, the process is there's an upfront payment, which is the 25% of the transaction value is paid at the time of purchase, and then the remaining installments are collected over time.
We didn't yet start our consumer lending business, so I cannot give you an answer on that. But I think the whole idea of tying transactions to lending, okay, is creating enough collateral about the business. If you can manage that way.
I actually have a question for Nadine that's on a different note, and maybe to give the audience a chance to pose any more questions if they have them before we wrap up. Nadine, we hear a lot about the rise of blockchain technology and cryptocurrencies. How do you think about that as Sarwa, and I guess is there room for that in your portfolios? Is this something that people are demanding more and more of from you at the moment in the region?
Yes, absolutely. Actually, we are seeing a very significant increase in interest when it comes to anything crypto, specifically Bitcoin, and here in the region. So, but the reality is there were a lot of barriers to safely buy these assets, including not knowing which platform to use and how to start about it. So we do believe that Bitcoin generally has a potential to become a store of value, but at the same time, it's also volatile. It's still considered speculative as an asset. So the way we listen to our clients that have been asking for exposure is we created a portfolio for that. We actually, let me just mute the team channel. We have a portfolio that's the same diversified portfolio that we offer our invest clients, but it allows them to get 5% exposure into Bitcoin through a fund. And that to us is a great way to actually invest while remaining diversified and invest in something that the client believes is something that's here to stay for a while. So the fund that we use is called Grayscale, and it's a trust. And they manage in, I believe, around $20 billion that they have under management. So yes, we have that ability to offer our clients exposure into Bitcoin, and it is something that more and more we're looking into, especially that we see a massively growing interest in the region.
Thank you, Nadine. Very exciting, and lots of ways to grow in different directions. This is a very interesting conversation. I'm sure we can go on for a very long time, but I want to be mindful of your time because I know some of you have hard stops at the hour. So I'm going to pass it back to Amjad for closing remarks. And again, it was a pleasure talking to you, and I hope we can hear more from you in the future. Thanks very much.
Thank you.
Thank you.
Thank you, Ola, and thank you to our panelists, Ashraf, Hussam, and Nadine. Given the substantial funding going into fintech in the Middle East, we expect to see more positive change. And personally, I think it's to the benefit of consumers, specifically women, youth, and underserved communities. So we hope this momentum continue, and we really thank all these disruptors for taking on these initiatives. Thank you all for joining us today. I look forward to seeing you at our next event in this fintech series. Please subscribe to our newsletter via the link in the chat to receive more information about upcoming events. Bye for now.